Why do Treasury, short-term Treasury ETFs drop every month?
Yeah, it's kind of funny. I actually have a chart. Let's see here. So is this is a daily price for the data for T-bill ETF. So it's through Spider, which is State Street, right?
Yeah.
It's one of our favorites. It's a 1 to 3 month T-bill. It's nice and conservative. The ticker symbol is BIL, right? And so you can see this goes back for a couple of years here, and they they uh, they rise in price as basically the interest accumulates. I
hmm
mean, these T-bills are designed to basically move in price up to a certain point. You can see the point there, and sometimes there's some variations, but
It depending on where the interest rates are.
yeah, exactly. So they are interest rate sensitive, not as much as most, but and then they pay it out. And so those big drops are the payouts. And so, for example, I was yesterday we saw like this drop 0.3%,
Yeah.
right? Which is like, wow, that's a lot for a T bill to drop, is because it paid that out,
hmm
right? So I also have a chart of the cumulative. So this is where you put those dividends back in, right? Same time frame, and then you can kind of see what I'm talking about. That's pretty smooth, right? They just march along. They'll pay more when interest rates are higher and less when interest rates are lower, right? I mean, but they are considered the risk-free assets. You know, in finance school, in college, you know, we learned what's called the capital asset pricing model,
hmm
right? This is a way to determine what a stock should be worth based on how much its volatility. They use beta in that, but you have to have a risk-free asset to use as an example. And so the risk-free asset is the US T-bill, right?
Yeah.
It is the safest asset on the planet, even with all these problems that we're having and all the different things that are happening. The T-bill, if the T-bill isn't safe, you won't have a place to go, right? So that's where you want to put it, right? It'll stick there, I think. So anyway, that's a good question. It's kind of fascinating. I mean, you go from there what it looks like without the adjustment for the the payouts. So if you see, you're watching the charts and you see, this T-bill thing dropping, because we got some questions about this. Hey, why is it dropping so much when it's not supposed to be? It's supposed to be the safe thing, and this is what it really is. So you just have to take a look at what the dividend
Yeah,
is.
and there's going to be a lag period between the actual dividend paid
Yeah,
and
that's
when
right.
it's announced. And so that's where you see this drop right now in the adjusted returns, but
Right.
it'll return back to normalcy in
That's
a
right.
couple days.
That's right.